me see if it's live. Oh, it's because it's not 4:30 yet. I think we'll be going live soon. Oh, I think it just popped up. So let us know if you guys can hear us by giving us a thumbs up in the chat or saying something. That'd be very helpful. Yep, it just popped up. So we should be seeing people in the chat shortly. And Anish, I think you can go ahead over and introduce us whenever you're ready.
Okay. All right. Just let me know, Richard, you're seeing my slide.
Yeah, give me 1 second. It's just a little bit delayed. Yep, just showed up. So you're all good.
All right. Hi. Good afternoon, everyone. This is a District IBD Meetup. I'm your host, Anish. I got Richard from Traderlion. This event is in partnership with Traderlion and Investor Business Daily. And we have a special guest today, Mary Ellen from Simpler Trading. Before we go further, just wanted to announce today we're going to talk about sector rotation in depth. So I only have a few slides, but I'm going to go forward. So I always start my meetups with a Dilbert comic because this is a great. If you guys just read it, it's really good. I think you guys will get a kick out of this one. Well, you know, that's my Dilbert with stocks, and just to let you know, none of us from the meetup group. Is a disclaimer. This is for educational and entertainment purposes. If you lose money, don't blame us. If you make money, please credit us. Again, we take no responsibility. This is all educational. So this is all that fun legalese. All right. So today I want to talk about Mary Ellen. Her bio is intensive. It is awesome. This is straight from our website, but I wanted to thank Mary Ellen for reaching out to me, and she's going to present today. I just wanted to give you guys a heads up. She's worked with Mr.William O'Neil, worked at Goldman Sachs. I mean, just working with William O'Neil to me is the coolest thing in the world. You can hang out with the legend. So I think this is an amazing bio here. And then and I'm going to go to the next slide. Okay, so for today's agenda, I am actually going to discuss one app that I use for my trading. It's the Earnings Seasons app. Then it's going to be followed by the special presentation, and then we'll segue into the Q&A. All right. So I'm going to talk about the Earnings Seasons app since I think a majority of my Twitter followers, including people who follow Traderlion, know that I'm actually pretty much working full time and I'm trading always in the go, including when I was at the USIC 2020. I rely on this app. It's on the iPhone. I don't know if it's on Android. I just need to keep up to date with my earnings if I'm having a position. So instead of going on the websites, or I know there are tons of tools, this app works for me. And then you can see there's MarketSmith app. So the way this app works is very simple. You list your stocks, like what you're watching. It will say what dates are their earnings on, let's say for Google, 26th April. Now it doesn't show if it's after market close or before market open, but it gets updated as you get closer in time. And if I click on, like, for example, Tesla, it will give me an idea what their estimate surprises were, quarterly EPS, just giving me a quick snapshot. I mainly use this tool for the dates. It's very handy for me because I'm always on the go. It's got a few really neat bells and whistles. For example, like I can click at the bottom of the app, and like for today, it will show me a list of all the stocks which are, you know, before market open or after market close. Give me heads up for today, tomorrow, and for this upcoming week. It also has an idea generation tool called Noteworthy. I believe the developer puts these stocks on there which have stocks which have high, which have moved a lot based on earnings. So it gives you an idea generation. You can see on this one the CF, and right now CF is one of those stocks which has been moving with the market trend in that sector. And it's got lists like oil and gas stocks that's up to date. So it's got all these idea generation tools in there. It's pretty neat little app. I use it for my earnings information. I need one location for all my earnings. So this is the app that I've been using for a while. So that's pretty much my presentation for this app. And because now we're going to talk about our special guest, Mary Ellen, and I'm going to give the screen to Mary for her presentation on sector rotation.
Okay, yes. Well, welcome everybody. I am not able to share my screen, so if you wouldn't mind unsharing, and then I can jump in.
Yeah. Let's see with Zoom. What is going on?
It should be at the top of the screen you're sharing, and maybe I can
Got it.
Okay. Here, I actually stopped your sharing for you. There you go.
Okay, wonderful. We are good to go here. I have lots that I'm looking very forward to sharing with everyone here. So let me go ahead and play my presentation from the start. Today it's going to be all about sector rotation, and I'll tell you a little bit about who I am. I can tell you this is a subject near and dear to my heart, certainly as it relates to being able to outperform the broader market. So let me begin. I'll give a bit of background as to who I am. I do have lots of experience both on and working with Wall Street. I started out on the trading floor of Goldman Sachs many years ago. And from there, I did have a mentor there who had advised me I should go to what's called the buy side. I did. I was a portfolio manager of over 2 billion in fixed income assets for about 8, 9 years. Wonderful experience. But the real highlight of my career came when I moved to the West Coast out in LA with my then new husband, and I joined William O'Neil and Company, and I was in their institutional marketing department. This was a very select group, a team where we traveled globally and advised professional money managers and analysts on the markets. But more importantly, we really educated them on that O'Neil methodology. So we worked with a lot of growth fund managers, small cap, hedge funds, just all about helping them get in front of these stocks, as you all know, just before they break out. Super, super exciting period for me. That was for 15 years. And I worked with a lot of top funds. I was another team member and I, my partner, we worked with Fidelity. I worked solo with Morgan Stanley, Merrill Lynch, on and on. The point there is, during my time working with these top fund managers, I often would meet with the sector leader, and whether it was the leader of a particular sector or the individual in charge of making sure the right sector was being weighted among these big mutual funds. And it really gave me a good flavor, a good sense for how important getting that sector right is. And I'll get a little bit more into that. So more recently, I have my own firm, MEM Investment Research, and it is powered by Simpler Trading. And with that, I am the author of a top performing newsletter, MEM Edge Report. And as we get into this, I'll share with you highlights of some of the stock selection last year. Many of you may know 2021 was a very tough year for the markets. My newsletter had 140 suggested buys throughout that period, and then we stay with those stocks and then advise when you should exit. And those 140 stocks, I had a 75% win rate. And the losers, the average loss was 3%. So really proud of my work with that. I think there should be an offer if you are interested in trying that. So more recently, I am a senior managing director at Simpler Trading. I do a lot of work with stockcharts.com as well, so you can go ahead and check me out over there. So let's go ahead and jump right in. I talked about the importance, certainly from my work with professional money managers, but let's talk about the master, William O'Neil. And really, this was a big part of my work there. Also, it was making sure that the proper sector and then sub-industry group was being really looked at very closely. And that's where those big leading stocks emanate from. So I'm going to share with you, this is from the first page of chapter 15 in his book, How to Make Money in Stocks. And this is a direct quote in one of the first sentences. It says that the majority of leading stocks are usually in leading industries, and studies that O'Neil had done over the many years shows that 37% of a stock's price movement, it's directly tied to the performance of that underlying industry group. And then another 12% is due to the strength in the overall sector. So therefore, overall, roughly half of your stock's move is driven by the strength and likewise the weakness of the respective group that it's a part of. So you can see that using historical precedent and studies, really how important it is to get this piece of your investing puzzle, if you will, in place. So what I'm going to do today is a couple of things. I'm going to begin by, we're going to take a look at 2021 as it relates to sector rotation, what took place, how you could have seen it. I'll share with you, a lot of it will be work from my newsletter last year. And then from there, I'm going to share with you what is taking place now as it relates to sector rotation. And lastly, how you can stay on top, the best way for you to screen for a rotation. And it's not going to be, you might be inclined to think that it's very time intensive. It does not have to be. So it's going to be a very simple system. So again, back to 2021, the best performing sectors during 2021 happened to be those sectors that were the most volatile. So this will come to pass as we move forward here. Then within that, there were several key, what I call metrics, that were in the backdrop behind the broader markets that drove this volatility for the top sectors last year. So I know many of you, certainly self-directed investors, it was not an easy year. We can begin by taking a look at the S&P 500. So last year it was up about 27.9%. So if you had an ETF, you were just fine. But those of us that were in the trenches experienced a lot of this volatility as it related to pullbacks. Pardon me. So this is the beginning of 2021. So you can see we had many pullbacks. This is just the broader markets, 4.3, 5.7, but individual stocks were down quite a bit more. And so that is just sharing with you really how kind of dicey it was last year as it related to the broader markets. We're going to get into just a few. I'm not going to go through all the sectors, only those that were most relevant last year. And then here we are with the NASDAQs, January into December, more in the way of a pullback. We had a correction here in late February, and then 3 periods of 8% pullbacks. And again, individual stocks really coming in quite a bit more. So from here, let's go ahead and take a look, because what I want to share with you is, again, using last year as precedence as a way to share with you how you could have gotten in front of some of that volatility and maneuvered what was at times trying periods. So using this sector performance, this is for all of last year, and take a look. Energy was up 56% last year. REITs had a good year. They were up 38%, but I'm going to focus more on energy, financial, and technology. And as we get through, you'll see that these are certainly financial and tech are heavier weighted. So we can see energy up 56, financials up 34% last year, and then technology up 34% as well. So these were your leadership areas. If you were in these stocks within those groups, you fared better, but it was not a simple trajectory, from the left of your screen to the top part of your right part of your screen. So here we're looking at a daily chart of the energy sector. And so I'm going to be putting the tickers in here because these ETFs, XLE is the S&P 500 energy sector, something I look at closely. We're going to really examine where we are now with this sector at the end. But let's just take a quick look. I've delineated here. This is from January into year end. I talked about that 54% price improvement. But I also wanted to point out that the move into energy actually took place at the end of November, and we'll get into that. But more to today's work is what occurred last year. So here's a marked up chart of that same period, January to December. Talked about it being very volatile, and one of the primary drivers as it related to volatility in those big leaders last year was interest rates. So up here we can see from February into the beginning of March, energy sector increased 31%. It was all about rising interest rates, the 10-year bond and other fixed income securities. As we moved further into mid-year, June into September, we did see almost 20% decline in those energy stocks, and that was all about interest rates dropping. And then likewise into year end, into Q3, a little bit of Q4, we did see a 28% rise in energy. So the net was an increase of 54, but you can see really how quite volatile it was. So let's take this a little bit further. So here I did want to share with you the concept that rising interest rates are tied to rising inflation, and energy is the best performing sector in the S&P when inflation is rising. We're certainly experiencing that now, but this was a presentation, part of a presentation I did last year, but it holds true with this concept as it relates to energy. Of course, now we have other factors at play as well. But here is a look at how you could have benefited from that sector rotation. I talked about this year-end move into energy, that XLE, and EOG. This is one of the stocks from my MEM Edge report. You was able to capitalize on that rotation back into energy with EOG. The stock broke back above these simple moving averages. The RSI, this is a momentum indicator I like to use. It went up above this dashed net neutral, turned positive, and then moving average, convergence, divergence, another momentum indicator, went into positive territory simultaneously with the break above the moving averages on big volume. So hopefully you can see how being on top of this type of rotation back into a group, and then likewise the rotation out, is saving you, of course, capital as the group begins to deteriorate. Here's another one. This was a big winner for us. This is Devon Energy, DVN. And so I did mention to you that energy sector really came into play in the fall of 2020. And so here is where I will share with you. We talked about interest rates being a driver during particular periods of the market. But one of the most consistent drivers as it relates to sector rotation is earnings. And we all know how powerful earnings are to a stock's upward advance. So taking us back with DVN back in Q3 2020, this was happening all over the place as it related to energy as these companies came out with earnings. Now, their numbers were not positive, they were negative, but they were coming in well ahead of estimates. And it was all about during the pandemic period, these energy companies did a lot to cut away unnecessary cap expenses and tighten their balance sheets. And so we got into DVN as we saw the energy sector reverse a very lengthy downtrend. So was able to stay with DVN through this pullback period that I shared with you with the group, simply because the gains were there, and it really only undercut this 50-day simple moving average, not a whole lot. So that was a 129% gainer for us. And Devon actually was one of the biggest, one of the top 5 for all of last year. So again, using that sector rotation to guide you to that sector, then that industry group, and then from there, drilling down. A lot of my work, of course, very similar to, I'm sure many of you, is going to be vetting out that top grower, that company that has the best earnings estimates and so forth. DVN happened to also, Devon, introduce an auxiliary dividend program that was very revolutionary at its time. A lot of other energy companies are also introducing it now. I'll share another one with you at the end of this presentation, but it's all about their free cash flow and sharing it with their shareholders. So therefore, really very a great way to get increased shareholder value. So I did mention to you, now let me just see if I did financials. Okay, let's do this. This is financials. As you may recall at the beginning, I shared with you last year's top performers. And so KRE is an ETF that I look and watch very closely. It is the regional banking ETF. And a lot of people may think bank stocks are stodgy, but I'm here to tell you when they move, you can really benefit. So here we are looking at this chart. And this was another area that came in the fall of 2020 going into 21. Same concept, negative earnings, but well above estimates, and then gaps up. But focusing on 2021, we can see that it was, again, not a straight trajectory, just a lot of back and forth. So here we are again with that interest rate overlay. So from January into March, bank stocks rose 35%. And this was, again, that same as with energy, as interest rates were rising. This is an area that benefits. During this declining rate period, down 12%, but again, toward year end, another 25% rally as rates were on the rise with banks. So really pointing out to you that using that chart as it relates to getting into when the group begins to enter into an uptrend, this is merely one metric that can impact, and it's continuing to impact stocks into this year. So let's go ahead and move forward. I'll share with you a couple of names again from my MEM Edge report. This is Comerica, a regional bank, CMA. And this is that concept when we saw that banks group come into favor. CMA was a top earner. The results, again, were negative, but well above estimates. And we did enter the stock here, exited in April, 51% gainer, but all about getting into it because we saw the move into that sector, which then went on to become one of the top 3 sectors of the year. So Bank of America, another name from our list, stock went up 38% during that February into the end of March period as interest rates were on the rise. And then this 12% decline when interest rates were falling. Here was another stock that we were capitalized on, SVB Financial, at the beginning of this year, and it was a 31% gainer, but again, capitalizing on the move into that sector and then selecting individual stocks. So financial sector is historically another area that's very sensitive to changes in interest rates, and it's particularly true of bank stocks. So technology, another top performer for last year. And as interest rates were declining, we did have that nice rally in the technology area into, this is taking us from May into September. Pullback here. Now, we did get this secondary late year rally. Many of you, of course, may remember it. Primarily, I will tell you, it was those mega cap, not necessarily FANG. I'm going to share with you the top holdings in these sectors as a way to help you understand that when a sector is on the move, oftentimes it can be those big heavyweights that are pulling it higher. And that was the case here with tech. It's Microsoft and Apple are the 2 big holdings. So here's IGB software, another group that normally, when it runs, it really has a go. And we can see again the impact here with interest rates as it relates to the group. When interest rates were falling, we did see a nice rise in the software stocks, and we were able to capitalize on that as related to the beginning of the year when interest rates were on the rise. It was a very tough period for software stocks, which are continuing to be under distribution. Here's a look at Adobe Systems, of course, a well-known software stock, and this is that timely period as interest rates were falling. And a couple of other characteristics, of course, the stock is breaking out of a nice 2-month base, nice volume characteristics. Outside momentum indicators are positive, and again, getting in on that industry group move, like staying on top of whether that industry group is back in favor, and then from there, cherry picking those best peak performers. And then Apple also, just quite simply, as interest rates were on the rise, we did see Apple deteriorate. And then into that June, September period, Apple, now there certainly were other characteristics with Apple. I'm not attributing it entirely to interest rates. Apple, of course, had a lot in the way of growth prospects. They had supply chain issues that they had overcome. So many more factors at play when these stocks get moving. But certainly for what I'm sharing with you today is one of several metrics that can in fact impact the move in and out of a group, and then really help you fine tune your stock selection. And then healthcare was another area. I didn't highlight it in the beginning, but this was another area last year where capitalizing on that base breakout move into healthcare XLV in at the end of March, and you can see it had a nice significant move out of this base. I remember this very fondly, and again at the end I'll share with you how you can really capture these kinds of moves back into sectors, and then it will give you that confidence to drill down into that group and again cherry pick those names with those really high growth prospects that can really help you outperform the markets. So this is a name when we saw healthcare come back into favor, Waters, WAT. So this is the stock really started to move prior to the release. So they had these two quarterly back-to-back very strong earnings reports, and we actually stayed with the stock as this uptrend continues. And then as the stock began to deteriorate, it was removed from our list, but more importantly was using that rotation into the group to give us that confidence to get into, first to look at that group and then get into it. Here's another name, West Pharmaceuticals, WST, again taking us back to that rotational swing into bullish territory with healthcare, and WST participated with that. Another factor when you see these sectors come in and out of favor, those stocks that are first out of the gate, if you will, when a sector first comes into favor, will go on to become your leadership names. And that was the case with West. They were one of the first to turn bullish with that healthcare sector, and then triple digit subsequent earnings improvement. And this was, I believe, a 54% winner by, again, getting in on that group in a timely manner and then picking the ideal candidate as it relates to those growth prospects. So we all probably are well aware now, but taking a minute here to remind you that big tech and growth names in general are going to be the most sensitive to rising interest rates. And it has everything to do with their valuations are going to be based on future growth and cash flow. So if interest rates are higher, that future cash flow is discounted. So hence the lack of appetite that's taking place in these high growth big tech areas. So From here, I'm going to share with you, and I don't know if there are any questions. I'm just going to carry on. No?
Yeah, I don't see any questions yet, but if
Okay,
anybody
Richard.
does have a question, just let us know in the YouTube chat, and I'll relay it to Mary. No problem.
Okay, perfect. Yeah, okay. So let's from here. So we took a look at historical precedents 2021. What I'm going to take us through at this point in time is a more refined look at how the broader markets are broken down into these sectors, and then some other drivers that can really move these sectors in and out of favor. So first up, the S&P 500. You may be aware that there are 11 underlying sectors within the S&P 500. That is the broader breakdown. And the heaviest weight at this time is information and technology. So technology stocks amount to about 28%. And I'm putting the ticker symbol here because this is how, using XLK, you can stay on top of whether that sector is in favor or not. And then healthcare is up next. And I have them color coded. The red is more aggressive as far as the underlying stocks. Healthcare is a little bit of a hybrid. It has a growth component, medical products, but then these bigger pharmas are more staid and less volatile. So consumer discretionary, another high growth area when it gets going, it's a 13% weight. Financials, 11%. Communication services and so forth. I'm just going to drill down here and share with you the general weightings of these. The importance here is when you see the broader markets, and this is going to be the S&P 500, is the S&P in favor? Is it in a downtrend? What areas are going to have the most in the way of impacting that sentiment relating to the S&P 500? So, for instance, right now, utilities are on the move. XLU, I didn't put it in there, but it's hitting a new high. But you're not going to see the S&P suddenly reverse its current downtrend. It is a lower weight. Likewise, energy really on fire, but in essence, it's only 3% of the all of the S&P 500. So from here, I'm going to take us into, well, this is a weekly chart, current for the technology sector, XLK, really identifying and sharing with you just how strong tech has been. Well, we know it was up over 50% last year, all about coming out of this pandemic period where I viewed technology as a consumer staple stock in the sense that people need it to be connected and just a lot in the way of innovation taking place. So here we are on this weekly chart. This red line is that 10-week moving average. The blue is a 40-week. So if we get that negative crossover golden cross, I'm sorry, it is a death cross. And it's not something that happens very often. If we go back, this is that 2018 bear. And this, of course, is the pandemic related bear market. Uh, so currently, of course, we can see in the intermediate term that tech is still in negative territory. But let's take a look at those top holdings in the technology sector. So I'm not going to spend a lot of time here. I just wanted to make sure that you were aware when you're looking at tech that Apple and Microsoft account for 40%. So oftentimes movement in these two stocks will very naturally have more of a pull as it relates to where technology is going. And then here are some of the other top holdings. From here, technology, the subgroup weightings, software. Now, I'm not sure how it is now. We've seen such deterioration in software, but for some time now, it has been the heaviest weighting. So just having that in the back of your mind, it's something certainly when I'm looking at these sectors. Consumer discretionary, XLY, another big component of the S&P. Also, this is a weekly price chart. We can see this. We are getting into oversold positions. We can certainly talk more about that at the end as far as I did a show on stock charts today that concentrated or talked about these sharp rallies. We had one this week, these oversold conditions, whether it's short covering or not, and how you can capitalize if you're a short-term trader. But here we are at XLY again, just quite simply highlighting your biggest holdings: Amazon, Tesla. We're looking at 35, 36% of the sector. So look to these names for judging the entire group. And then communication services, XLC, peaked well before technology. But let's take a look at the top holdings here: Facebook and Google. And so 35% of this XLC, actually more, it's 46%, is Facebook and Google. So you'll want to know that. So let's take a look at where we are currently. This is a chart. Just see the date. I believe it is yesterday into yesterday's close, but taking a look at the daily chart of the S&P 500. So we can see that your simple moving averages are trending downward. When this occurs, any kind of rally attempts will tend to get met with lower resistance. So 4,100, a lot of you are probably keying in on this as this near-term area of support, that February low. And so we've had these head fakes where the S&P rallies. This is the end of January, looking very, very promising, and unfortunately not following through. Ideally, we want to break back above this 50, this red 50-day at some point, indicating that the downtrend has been reversed. And then these outside momentum indicators, both in negative territory. So I want to share with you a weekly chart of the S&P 500, and this is for two reasons. One, it's going to give you a longer term outlook for the markets, but also using historical precedents to share with you what I'm on the lookout for to tell us that the broader markets have resumed their uptrend, or actually, yes, come back into an uptrending period. So what I've done here is highlighted the last 3 bear market periods. And of course, we're all very familiar with the follow-through day concept. That's a key component. But this is the chart and what leads up to that follow-through day moment. It's a way that you can kind of get a feel for, are we on our way? Are we close? So looking at this, the 0809 bear market. And what I wanted to point out to you were these key outside momentum indicators, because that follow through day is going to really be the defining moment, if you will, as far as identifying a downtrend reversal. But are we close at this point in time? Well, first up on this RSI, relative strength indicator, you're going to want to see it start heading north. That's a start. And then once it breaks above this net neutral 50 into positive territory, that's an early signal. I use stochastics for these broader market indices, and we can see we want these stochastics to be trending upward. But on this weekly chart, the STOs turning above 50 in line with that follow through day. But again, here is, you're going to get these head fakes, if you will, certainly out of the 0809. That was a very lengthy bear market. It was not going to be a swift recovery. So we can see an attempt once we break up above 50. And then these earlier attempts, notice the RSI never turned positive. So these components combined are a signal. So very same principle here as it relates to that 2018 bear market. Once the stochastics turned positive in conjunction with that RSI, again, we had these head fakes. RSI never got positive. And then, of course, coming out of the pandemic, same principle. So what I want to share with you is where we are now with the S&P 500. We can see that the stochastics are still trending downward. So of course, that first step is going to be a stabilization and then a trending upward. Likewise, with that RSI, we are going to want to see it at least trend sideways once it gets up above 50. So this is a really bigger picture view of the markets. If we are on the prowl for a downtrend reversal that's going to stick. Now, of course, in between that period, We are going to have these sharp rally periods. They could last 2 days to 2 weeks, but for longer term, as it relates to identifying the broader markets reversing, this kind of weekly chart can be really quite helpful. Yeah, so let's just take a minute here on looking at sector rotation. I shared with you some of the characteristics. Certainly earnings, interest rates can drive which way sectors are going to be, whether in favor or not. But this chart is sharing with you the what's called business cycle influences in sector rotation using historical precedent. So the orange line is identifying when the market's bottomed, bull market, market top, bear market. So we can see market coming out of that market bottom into a top and then into a bear market. But this blue line is relating more to the business cycle. And down here we can see recessionary periods, early recovery, full recovery, and then an early recession. So it's really helping, and it does help define what groups come in and out of favor depending on where we are in this business cycle. So in essence, there are four periods within this business cycle. So let's take a look. I want to see what I have here. Okay, so I'm going to share with you now what the evidence, what phase we very well may be in. It's only beginning to unfold, but there is strong evidence that we are in what's called a late cycle phase. So let's just take a minute. We can go back to that. So we come out of this pandemic period, we have an early recovery, a full recovery, and then we go into this stage, late stage recovery, late stage phase, if you will. Not so as what takes place during this time is that energy and material sectors will do well. So basically, it's a period when inflationary pressures are building, late cycle economic expansion. It does help keep demand solid for these energy and material sectors. And then defensive sectors also historically perform well during this late cycle phase. Healthcare, consumer staples, utilities, definitely seeing that. I talked about staples as it relates to heavyweights impacting it. Well, we'll get into that, but staples, the group does not look good, and it's because a couple of the heavyweights are dragging it down. But there is, under the surface, a number of staples stocks that look good. I talked about utilities hitting a new high, and healthcare is another vibrant area right now. So during this late phase cycle, tech consumer discretionaries lag, and we've certainly have been seeing that take place. Then, okay, this is a little bit of a, see if I may. Okay, so let me just take a minute here. There is speculation that we are headed for what's called stagflation. That's when the rise in inflation, it slows economic growth. So the last time that we saw this was the 70s into the early 80s. Oil prices skyrocketed. So we're seeing a lot of the same characteristics now. The big difference is unemployment is at a low, a pre-pandemic low, so we're not quite getting that. But it's not the best scenario. I know with O'Neil, certainly with my work, I am not about trying to predict the markets. Rather, I am going to let the market tell me and use this sector rotation and other charts to guide my way. But I did want to talk about that, the move into energy stocks and when it first materialized. This is a daily price chart of XLE, and we can see, when I say first materialized, I mean this year. So we're looking at the energy sector turning bullish here. It was on January 3rd, something that we highlighted in my report. Nice high volume characteristics as it broke above these moving averages. Your momentum indicators turning positive. And we can see how energy has really continued quite a bit higher from here. And here we are what I am sharing with you at this time is a daily price chart of the energy sector. This is how, for my work, using historical precedents to guide you as to whether energy is still in an uptrend and really what to be on the lookout for to tell you that it's time to take profits. So what I'm doing is taking us back to last November and those characteristics that took place ahead of this 5-week pullback. So first up, we can see that energy going into toward the end of last year was overbought. So currently we do have those overbought conditions, but that is very simply just indicating that a pullback at some point is anticipated. Stochastics above this 80 area overbought. Currently we're overbought. But what are the characteristics that indicate that more than a pullback is taking place? Again, it's going to be that RSI on the daily turning negative, and it's in conjunction with a price break, in this case, below the shorter term moving averages, and also in line with negative stochastics. So as of this recording, we're still in good standing, but keep an eye on that as it relates to this another way to stay on top of sector rotation. Here's a stock that we picked up on January 3rd when we saw that energy turned bullish. OXY was one of 3 energy stocks that we added to the list, and it's been pretty good performer here. The other 2 stocks we put on, not as great. This stock, of course, is up about 65%. The other names, I think one of them is up 15. But again, each of them added as we had this nice downtrend reversal that took place. So from here, I was going to go in and share with you how a couple of easy ways that you can really stay on top of sector rotation. But I don't know if there are any questions.
Yeah, there actually was one from Alex here. Is it fair to say that a sector can be in a bull market even if the general market is in a downtrend?
Yes, absolutely. And we just looked at energy. That's a prime example. So and that is a great question because a lot of the subscribers to my report, they oftentimes will have a strong background with IBD and O'Neil's work. And even when the markets are in a downtrend, for instance, with financials last year, you will still have these groups, not all the time, but these groups. So clearly shared with you earlier that the broader S&P 500 is in a downtrend, but energy is faring quite well. And you can play these uptrends, the bullishness in these sectors, even if the broader markets are deteriorating. But of course, sometimes you'll want to tread a little more lightly. The dynamics in place as it relates to geopolitical and other supply shortage issues are going to help you and provide you with the wind behind your sails, if you will.
Perfect.
So
and there's one more, if you've got time for it.
Oh my gosh, yeah.
So the question is, after the trend has broken out of the bottom of the stochastics, do you have an early entry strategy?
Okay, so let's, now you don't know if that's relating to the broader markets?
I think it was related to when you showed all the different sectors and the stochastic indicator on the bottom. Yeah, I'm not quite sure.
Okay, yeah. You know what? It doesn't even, thank you for the question. It's not, regardless of whether it's the broader markets or a sector or a stock. From my work, I am going to want to see it trading above these moving averages. Until I see that, you can see, for instance, with XLE, it's going to act as resistance. And then once we break above it, you can see that it does allow that, as you will, more room. So as it relates to early entry, uh, I, it's not going to be, and this is true, I would say, of all of O'Neill's work, you're not going to be the first one in necessarily, but you are going to be in it to win it, in the sense that you're not going to hit any potential upside resistance, and you are, yeah. So I'm not sure if early, but for me, I am going to want to see it above these moving averages, which can very often act as resistance. You're really paid to wait. And if you can marry that with positive momentum indicators, you're just uh, on your way. Yeah.
Yeah, perfect. And there's also one from Brian, which is kind of it's a general question. What is your process for identifying a sector starting to move? But I'd also like to ask a question. Are there any routines that you do post market or on the weekends to try to keep track of what sectors are in what type of trend, and looking for those sectors that are starting to develop an uptrend?
Yeah, very, very good question. I was just going to segue into that and share with
Perfect.
you some simple screens. Hopefully, see if I can. Okay, here we are. So hopefully you can see this. And let's see, that's industry groups. Okay, let me do this. Now, this is how I do it using stock charts. I'm just very familiar, very comfortable with the service. And for this purpose, they have a really, just I think, wonderful preset way. Just 2 clicks of a button and you're golden. So here is on this first page, it's called Sector Summary. So I'm just going to click on it and see if I can move this over a little. If you can bear with me a minute, I want to make sure I get it all. And so quite simply, it's initially going to share with you on a given day, 1 week, 1 month with the performance. That's good to know. I do this every single, well, every day, but at the end of the week. This can be a week, the end of the week exercise, and I'll share with you a couple of other items that you can do that'll very quickly help you get your arms around what's taking place. So here we are with those 11 sectors of the S&P 500. And then down here at the bottom, I'm going to ask for what's called a sector candle glance. Quite simply, it's a 2-month daily price chart. And you can modify this with whatever moving average. I have a 20-day and a 50-day on here. But where it gets interesting, I want to make sure everything is identifiable. Sorry about that. I think I got out of my little window there. Just a little. Because I want to be able to see all of the 11 sectors. Here we are. Okay. So what we can do from here is add an overlay or an indicator. And for me, I find adding this relative strength indicator super helpful. And then I'm going to sort this in descending order. Go ahead and update that. So at the end of each week, I can see on a relative basis which sector is outperforming the other sectors in the S&P 500. And here's the S&P here. So up here, this is where you want to, if you are actively in the markets, you want to focus on these sectors up here. So if you do this each and every week, which I've been doing for years now, you will capture this rotation in 2 ways. One is you will see sectors, this is the lower quartile, these are your relative underperformers, and you'll see sectors as they come into favor, they begin to move up to the forefront. So that's one way. And then the other, quite simply, energy has been up here in the forefront for a very long time, certainly for this year. And then I did mention to you utilities hitting a new high. So that's one very quick way that you can. The other way I shared with you is quite simply, again, at the end of the week, we're in a really very unusual period in the markets, but in a more standard market environment, this weekly performance is going to give you that 1 week view, but also confirm what you might be seeing as it relates to strength, as it relates to sectors moving in and out of favor. This stock charts technical rating is another way. These are your strongest areas up here, kind of confirming what we just viewed as far as discretionary and tech out of favor. So that is one exercise. And then another that I do is I have a list of ETFs that for me really help me get my arms around what's working, what's not, what's moving. So this is from that first page. Let's see if I can get back to it. Well, the point here is you can populate this candle glance. It doesn't have to be sector. You can put any number of ETFs in here and get that same 2-month daily price chart view. So here we are with the RSI. I'm going to update this. And up here again in the forefront, so we can see silver. Silver was not up here when gold first started. It's only been more recently, over the last 2 weeks, that we've finally seen silver join the party, for lack of a better word. And that's now moved into the number 1 spot. And then gold, which had been up here at the forefront. And I always want to see what is happening with yields, with interest rates. This is the yield on the 10-year. It's up above 2%. You can really, depending on your style of investing, again, put any number of different metrics. Brent crude was at the forefront, but it experienced pretty significant pullback this week. Where is volatility? Volatility is actually coming in a little, certainly relatively compared to where it was relatively. And then unfortunately, software still down here at the bottom. But it's the kind of thing, if you follow software, I'm sure felt this as the group began to fall out of favor. So I keep it on my list, but unfortunately it's been down here in this lower quartile. IHI is medical devices, so semiconductors, banks, all groups that for me are going to really help keep me on top of what's working and what's not. So I can share a couple of other ways too, if that would be of interest as far as staying on top of these sectors.
Yeah, I think that would be great.
Oh, super.
Wow, this is really cool. I like how it looks like the newspaper.
Oh yeah, you're right. You're right. Yeah, it's kind of that black and white, and then a little bit of red. Okay, so let me. I have a lot of lists here, so okay, here we are. So you can, within this particular service, and you can certainly do this on MarketSmith, as far as having watch list. Oh my gosh, I love my watch list on MarketSmith. But as it relates to having a group and being able to very quickly see a lot of names at one time, I have other ETFs, and they are based on whether it's blue chip, whatever your style might be. Industry groups, we talked about this, high dividends, only commodities. So you can really mesh it with whatever you are trying to get in front of, whichever area. So we can take a quick look at, for instance, industry groups. And I'm gonna hit view all, and then I'm gonna go from here to that candle glance view and add that RSI. So 3 steps, hopefully I didn't lose anybody there. And then descending. So this is going to refine it further as it relates to industry groups and what's working. So up here in the forefront, again, all using these ETFs, we can see metals are up here. Of course, gold, oil, another oil. But let's just see. Yeah, so this is oil equipment is coming on. It was E&P names for a while, but we're seeing the oil equipment stocks. These are those pipelines. Really have been watching that move up here to the forefront. Uranium, so not a lot in the way of surprises here, but more to the point is some of these areas that are beginning to move into favor. This is solar, TAN is the ticker. And we can see that it is coming under accumulation. So it's this kind of screen that you can populate with a given universe and then stay on top of areas that are, again, starting to progress up to the forefront. So that is another example, another way that you can, again, the other is if you put these lists together, they you can request to have a list sent to you daily and or weekly, and it just very succinctly gives you percent change for that day and for that week. And it's all about, again, getting in front of those areas that are currently in favor and then relatively outperforming the broader markets. I'm trying to think what else I can share with you as it relates to that. There are other systems. I don't use this so much, but there is the relative rotation charts.
Yeah, I want to talk about this one.
Oh, okay, yeah. Go ahead.
I know Panerai has something like this in there, so I want to know about it.
Well, I have to say it's surprisingly similar. Yes. So what we are looking at here, let's see. Now, I did RRG for the, let's just go back and I'll tell you what I did here. One of the compartments you can get here are the market movers. So quite simply, these 10 stocks are on today. They were up the most. And so from here, I can go to this RRG and look at which names are leading. This green means that they are leading. And then down here, these are weakening. So Pfizer was up, one of the biggest gainers on the day. Likewise with McDonald's, both names are weakening. But if we go down here, you can see you want to be on the lookout for these names that are like PWR was up today, and was in this lagging, but it's improving. It's heading in the right direction. REGN went right from a lagging to a leader. So what we can do from here is take a look at the charts to confirm what that is telling us. So here's PWR. This is one of those top S&P winners, and I think it broke out today, actually. This is a construction stock. We're seeing a number of these construction names, Fluor, FLR, powering to new highs. Boy, we can go down that rabbit hole. I'll talk stocks.
Oh, I was looking at Fluor. Forgot to put an alert on.
Oh, yeah. No, it's had this nice
extended
base breakout on volume, but yeah.
It's very fascinating.
So, yeah. So that, how I can get back to that relative rotation. But I guess more importantly, I want to make sure that everyone really got that concept of how important getting that sector, because I shared with you the top 3 performing sectors last year, but it was not a straight trajectory. It was in and out. And I can tell you from my report, my biggest winners were getting in those names in the right group as they just came into favor. So.
Wow. So are you usually buying your entries, the traditional can slim cup and handles above the moving averages, buying your entries? Yeah. Okay, so.
Absolutely. All about the cup with handle. That's a fan favorite. I just did a show. I think I told you about the pitch last week, and two of my 5 picks were cup with handles, base breakouts. In fact, I wonder, I think Fluor, was that?
Yeah, it's cup and handle.
Yeah, we can call it that. Yes, so my work is steeped in the O'Neil methodology through and through. And so what I do is overlay a little bit of the kind of institutional process in the sense that when I put names on, it's with an eye toward holding them a little bit longer. It's not a swing trade, although in this environment, swing trading is advantageous, but
Okay.
Yeah.
Oh, wow. This is going over these stock charts is really cool, especially how you laid out the sectors. I thought that was really good. That was
good. Oh, I'm always
really enjoyed that. That was so is your so you always look at sector groups first, then you look at the stocks in those sectors, right? You're not doing the other way around.
It's a little bit of both. So probably like everyone here, I'm screening, looking at those base breakouts, looking at the outperformers, and then I want and I need that sector to be in an uptrend before I get involved. So I'll see stocks that are picking up and I'll know, okay, these are going to be the leaders once the sector turns bullish. But I do need to have that industry group behind me before I get into a particular stock.
Okay.
Yeah.
Very cool.
So I don't have a whole lot else to add to that. I mean, the other component that's, of course, driving the markets now with inflation is some of these higher yielding names are going to be more in favor. And are they able to grow their dividend faster than inflation is growing? So, like any period, there's always going to be extra dynamics in that backdrop that are going to drive price action.
And I also want to talk about your moving averages. I noticed you use simple, not exponential.
Yes. Oh my gosh. And actually, you're segueing right into the fact that I am offering a course for those that are interested. It's a simple moving average course, and it's about a 40-minute course, but it talks all about how to use these moving averages to get in and out of a stock, and then what other indicators to use with it. More of a way to get to know my work. So please take advantage of that. It's been recently priced at, I think, about $130. So yours for the taking today. But as it relates to using simple versus exponential, really a lot to do with my training and my work with institutions, in the sense that this is what they are looking at. And yes, we've had a big inflow of self-directed individual investors come in and move stocks in the markets. But at the end, it is these institutions that are primarily driving price action. So I want to have that same indicator that they have. This is what they're looking at with breaks above, breaks below, this 50-day simple. But periodically I'll use that EMA. I'm kind of working with it a little bit more of late, but for the most part, it is the simple moving averages.
What's your favorite moving average? Like, what do you like to see the trend in on the 21-day, or are you buying it on just making sure it's above the 50-day moving average? What do your style works?
Yeah, so for me, it's going to depend on what phase the stock is in. So for instance, we're looking at FLR. I'm going to want to see it break above this 200-day. You can see the head fake. Once it breaks above this 50-day, I'm getting pretty good volume. Your momentum indicators are positive. So this is my first, if the stock's reversing a downtrend. And then as the stock advances, I want it to find support at the 10 and 21 to confirm that that uptrend is still in place. Break below the 50, I'm out. But once the stock gets going, I'm going to add a 5-day simple moving average. And this is my buy point. If a pullback to that 5-day becomes the ideal buy point for the stock. And we can even see it back here when the stock got going during this August into November, pullbacks to that 5-day when that uptrend really gets going.
That's a lot like Oliver Kell. He does similar to that style of trading. Yeah, he does the moving averages big time. That's really cool. Oh, that's aggressive trading right there.
Oh yeah, I mean It'll keep you in the stock. Some of the, for instance, OXY, and for those of you that take advantage and trial my MEM Edge report, you can go back to the archives, all the reports, and you'll see this is a daily price chart, and when the stock really got going, they reported earnings here, and then they announced a dividend increase, share buyback, and it really got running. And a lot of people, of course, were wondering, well, gosh, it's up so much. Should I book profits? No, it's still finding support at this upward trending 5-day moving average, buy on the pullback, and it's uncanny how it works. Even though it's overbought and you have that volume behind you, so it can be really powerful. It's a way to keep you in the stocks and not exit too soon.
That was an amazing answer.
Oh,
I'm gonna get a lot of questions on that one.
Oh, really? Tell me.
I mean,
I can pull up MarketSmith real quick.
Yeah. Let's pull up MarketSmith. That'd be great. Because there's so many stocks follow the 5-day moving average. You can really optimize trades on that. I know, Richard, you use the 5-day too, right? Or is it Ray?
I don't know if either of us use the 5-day. I use the 10 EMA, which tracks pretty closely, but it's going to give it a little bit more room than the 5-day for sure.
Yeah, that's right.
But Brian Shannon, he uses the 5-day moving average, but the equivalent on a 65-minute chart. So it's the equivalent of the daily 5, but his primary time frame is a 65, I believe, or he likes the 65 watt. Yeah.
65-minute chart.
Yeah, because that way you split up the day into equal partitions.
Interesting.
When it's just an hourly chart or 60-minute, you've got that first 30 minutes or whatever it is weighted more, so it's not splitting it up equally.
Wait, I had this back at 2010. There we go. Interesting, 65 minutes, and I'm not sure what charting service does that, but that always looking for.
I think most of them
TC2000.
Yeah, TC2000.
Oh, okay.
Yeah, TC2000 does that. To be honest, I use a 2-minute chart, but I mean daily and weekly. That's what I started with, O'Neil style completely. But yeah,
interesting. Yeah, we can look.
So, how do you use the? This is a good question about how do you use the IBD's 197 industry group ranking?
Yeah, so for that, I'm going to be on the lookout for. This is something that I did very frequently. We would run customized screens that we would take with us for client meetings. So for instance, relative to the industry groups, let's just see if I can capture this properly. But it's the kind of thing that you can screen for as well. So here we are. Wait a minute.
It said 197 industry groups, or are you talking about a screener?
Yes.
On that?
No, you're absolutely right. I was, yeah. So let's just take a quick look. So here we are with the industry groups and the rankings, but where it can get interesting is where you are looking at those industry groups that were triple digit and are moving to the forefront. Oh, that's the number of stocks.
You're looking at the industry rank improving, right?
You bet. Yeah. So let's do this. Okay, this is better. So in essence, we're looking for those groups where the progression is from a higher industry group ranking over the last 6 to 3 month period, but it's really starting to move up. So as for instance, certainly mining and gold, and then likewise those industry groups that are deteriorating. So we can see here with wood products, a lot of this is going to be pretty evident. But interestingly, I showed you KRE, it's not doing well, but some of these really regional banks are surprisingly doing well. So again, it's using, I mean, you can tell me how do you use this?
I use it the same way as you use. I see how the 6 month the numbers are improving, and that's when I start looking at the groups for finding the top stocks in the groups.
Yeah, we're seeing rail and truckers picking up in here.
Now, are you focused on the top 40 once they hit that top 40 range, or you're more flexible with it?
Yeah, I'm going to be more flexible and potentially get in a little bit earlier just as they're starting to move up to the forefront. That 1 to 40 was something that was ingrained we used to have these big O'Neil maroon database books, and that very first page had each of the industry groups, and then the top 40 had a big box around them, just really saying, hey, here's where you really need to be looking. But yeah, I tend to want to get in a little bit earlier.
There's a good question for you. It's from James on the YouTube chat. If banks do well during times of rising rates, why do charts look poor now?
Yeah, that's a great question. There's two reasons. One is this is KRE. Trying to think how I can do this here. But interest rates actually did take a dive here. But one other factor that came into play during this Russia-Ukraine conflict was the SWIFT banking. This is the communication system that large banks used for global transactions, and Russia was cut out of that SWIFT, out of the ability to transact with their banking systems globally. So what happened is in a flight away from banks, primarily the bigger names, the Morgan Stanleys of the world, because the thinking was that their fees from the SWIFT banking, the discontinued ability of Russia in the SWIFT banking, had a very fast negative reaction. The other thing, if you look at Morgan Stanley, Goldman, each one of these larger banks, they came in with numbers here in the beginning of the year, and their outlook was negative. Goldman, Morgan, again, all of these big guys, and it was primarily because of their capital expenditures increasing. The primary increase was due to increased employee costs, their ability to attract and retain employees. Like anywhere, they people are leaving their jobs in droves, particularly investment banking and a lot of the Wall Street type names. So that is also a big reason for the decline, because some of these bigger, heavier weighted names are deteriorating due to management guiding lower for the remainder of this year because of those increased costs. So a couple of reasons there. JP Morgan. So
also missed their earnings.
Yeah.
Yeah, they missed their earnings. Yeah.
They,
I mean, you can see the gap down happening. That's a telltale sign.
Right. And on big volume. So yeah, they're all struggling to retain their high-priced Wall Street bankers, among others. But yes, that was a great question, by the way. Yeah. Oh, well, any question is great.
Yeah. And Richard, there's a question about shipping. Can you figure that out?
Oh, yeah. Oh, my gosh. I love shipping.
Yeah, it's basically asking, what do you think about the ocean shipping group number 19 dropping from an earlier higher rank? Would 19 but dropping still be under consideration for, potentially positioning in that group?
So so has it dropped in price? I would be surprised.
That's
here we are.
I'm
Perfect.
not sure. Yeah.
Okay, so let's take a look. And oh my gosh, you got your audience is so on it. I love it. Yeah, so you're actually going back 6 months, and it was definitely a different environment. So 6 months is going to take us back to where?
6
it was
months
the
would be around like
my brain. So June to
October.
yeah, so it's going to
October.
be in here.
Yeah.
Interesting. Yeah. So we did get a dip during that period. So that would explain that. But overall, shipping stocks are looking fantastic right now and a number of dynamics taking place. So let's take a look at Zim. I'm sure everybody's familiar with this. I'm not quite sure what to make of that 49.5% yield, but it has a very high yield. The other factor that is taking place, these guys came out with triple digit, almost 400% year over year growth, above estimates, big growth. And if you follow it, these shippers closely, their container, I believe their daily rate in a normalized period is about 4,000 per day, and it's up to 26,000 per day. I mean, the 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 exponential increase in their daily shipping rates, and they're getting it. There's not a lot of pushback that can be, people need to have items delivered. So the growth dynamics are huge for this year. So we can take a look at any number of these names. EGLE looks great. Let's take a look at that. Yeah, so this is where that 5-day as it continues to trend higher. But another big mover on earnings. So this is a very dynamic group and looking quite compelling. Yeah, nice uptrend in Star Bulk carriers. So they have those huge growth potentials. Management after reporting earnings, they're guiding higher into this year, and then you have these big yields, 14.1% for SBLK, and so on. So that, in fact, I didn't really talk about it, but stagflation. Did I talk about it? If we go
Yeah.
into so if we go into a period of stagflation, it is going to be higher yielding stocks that are going to be high in favor, and then also the metals and mining are going to continue to. This Vail is an ADR. It has a 14% yield, so that's you're going to want to keep in mind as well as we progress through this unprecedented period. And I was going to mention, I didn't get through it all the way, but Ray Dalio just posted an excerpt from his book, and it was fantastic. And it talks about the changing world order and what takes place. And he goes back historically, talks about easy money. When the easy money goes away, here's what happens. So if anybody has 30 minutes of their time, it's on YouTube, and just a wonderful explanation that can help define what we're going through right now.
And there was a. Oh, go ahead.
I was saying no, that was a sidebar, but
Yeah, no, 100%
I found it
agree.
really enjoyable.
Yeah. And there's a question here within the sector. So once you've identified a group, a sector that you're interested in, what parameters are you using to filter out and find the leaders?
Great question. Yeah, so a couple of things are going to come to mind. So let's see. So I do have it. I'm not going to say an uncanny knack, but there's reason to it. So when energy first started to turn, let's say the fall of 2020, I'm going to go through that list, and banks first came into favor. I'm going to initially, I tend to traffic in higher, let's say volume. It's going to have more liquidity, and it's going to drive me probably primarily to larger cap names. But within that structure, I'm going to want to see the growth. I want to be in front of the biggest grower. So let's look at OXY. This was a name I come in January 3rd. I see that energy has reversed. This is XLE. Here's that move into energy. So I want to participate. So as you drill down, for me, I centered on E&P, exploration and production, the bigger guys. Those are usually your first movers in energy. And at the time, OXY was the fastest grower. So we all know that with earnings, big numbers, and they were in the throes of increasing their yield. And so if we go back, okay, that's more recent. But if we just go back just these last 2 quarters, 117, 202%, we're seeing big growth. And subsequent to that, if you look at the energy group and those names within energy that have had the largest number of analysts, yes, I do pay attention to analyst revisions because the markets still pay attention to that. So I'm going to pay attention. And OXY was getting a lot in the way of upward revisions. And as it stands now, it does currently within energy have the largest number, I think 23 upgrades. And that's coming after this earnings. So it's going to be all about growth, the growth current, most recent growth, current prospects, and going forward is going to be critical. Of course, I'm going to marry that with a positive chart formation, and that's going to be what works for me. Because when you look at energy, for instance, and I don't know how many of you do this, where you go into the industry group and the sector, and then you take a look at all of the underlying groupings. I don't do this all the time, but with energy, so there's 13 sub-industry groupings in here. So it's going to take me 13 seconds to just kind of swiftly, I do this with semiconductors because the undergroupings there come in and out of favor depending on what are you in the manufacturing, the equipment manufacturing, what part of semis are you in. So here we are with, for instance, oil and the refiners. You know, wait, let's see if I can get back up here to why that's not working. Okay, so here are the international exploration and production. Canadian CNQ is the other name that I picked off. I only have 4. And then so you can, if you drill down and look at those sub-industry groupings, it's going to be quite telling. Of course, coal, there's a big story there. But more recently, these drillers have come on. So just taking a minute to drill down into the sub-industry. My first go-to is going to be E&P. It's a group, it's an area I'm very familiar with. But then if you take a minute and broaden out beyond that, it's only recently that we've seen these drillers really come on, but they are coming on. The other area I mentioned earlier are these field service stocks that are showing exponentially more in the way of, I just added OII, because you want to stay on top of some of these newer groups as their momentum begins to come on beyond just that first grouping. These machinery guys, they're really NOV, they're coming on quite strong here. And it's all about these pipelines. It's all about what's happening with Russia, the need to export nat gas over to the UK and so forth. So anyway, yeah. Wait, did I answer your question?
No, this is really cool because I actually do this too.
Yes, yes.
This is so cool how you're also, showing us how you do it. It's really nice.
And quite honestly, again, it's again 13 groups, 13, 20 seconds maybe, but it's just going to be so telling and a lot of times confirming what you might be seeing out there.
So I'm gonna throw a curveball question in. Now, let's say you're looking at these groups and you see all these stocks sectors, and out of these stocks, are you going to choose a large cap, mid cap, or just looking at the patterns? Then are you going to drill down, or are you going to just focus on the top stocks of each sector?
Yeah, I do tend to focus on larger cap names. And yeah, so we can look at, for instance, the Russell 2000. And I did get I really got hit on this one when I had put some energy stocks on, and then that was in January. And then as we progressed, the Russell 2000 started coming into favor. There was talk of money flows into these small cap ETFs, and I thought, oh, perfect. And I put a small cap energy ETF on the suggested holdings list, and I definitely got my hand slapped. And I should know better. Small cap names are more volatile. I didn't have the confirmation, certainly of the group. The ETF looked pretty good, but for the most part, I am going to be in the larger, more widely watched and trafficked types of
Okay.
names.
The more liquid stuff. Okay.
Mm-hmm.
Oh, okay. Very cool.
So,
Richard, any questions?
I'm not seeing too many more. There's a few kind of unrelated to the topic of today, but nothing from my personal side.
mm-hmm. Okay.
Yeah, floor's open, guys. Any questions? All three of us are on here, so you can ask anything.
Yeah, ask anybody any question.
So,
Here's one that just came in. In the current market, the fundamentals are not working as much as we would like it to. Do you change the way you look at the fundamentals during bullish market versus a volatile market like today's?
Oh, why don't you go first? I'll let you go first, Mary.
Okay, yeah. So, no, the fundamentals are going to be first go-to, but I think what you're talking about, like, for instance, I'm pulling up Reliance Steel, and they are pegged to have negative numbers relative to a big 2021. Is that going to steer me clear? Well, I'm seeing estimates revised upward, but yes, I will have more patience, if you will, and we're seeing a lot of that where names with negative earnings estimates are sitting up here. The chart, I'm going to look at the industry group. I'm going to look at or watch the dynamics taking place within the metals area, for instance, the whole supply demand dynamics that are taking place there. So I will be more forgiving as it relates to fundamentals during periods such as this.
And that's a great answer. For me, at this time when the market's really down, I'm just honest. I'll be focusing on stocks which are fighting the market, like for example, Reliance Steel, right on the chart, because the RS is up. Usually the numbers come later, the story comes later, the stock action comes, I assume, first. But I mean, this is based on the situation, you know, as we are right now.
And Richard?
Yeah, probably pretty more similar to Anish. Yeah, I'm looking. Ideally, you have the fundamentals, the technicals all lining up, but the technical strength often points us in the right direction even before, you know, great earnings and sales in tough markets.
Very good. Yeah, I was going to ask you guys what your thoughts were on some of these defense-related stocks. We saw them really jump to new heights when the
those are leading stocks.
So how do you treat like a Northrop Grumman?
I mean,
hit a new high on Monday.
Now, I mean, obviously, I need a setup on this one. I won't be just buying it, but there's a technical way. You know, I would just wait for like now if it's pulling back, if it sets up, I would be buying it. But it's on my watch list. LMT, all the defense stocks, they're all on my list.
Yeah, I mean the spending is there, and these global-facing companies are going to see growth, no doubt.
Yeah.
I like if you look at LMT and scale back a little bit, maybe go to a weekly chart. That 400 level has been pretty significant. I mean, this is a long base that it's just kind of pushing out of here. So if it can tighten up again, form a setup, you can see those last two cup-shaped bases. The top was pretty much right at 400, which it kind of blasted out of on volume. So we'll see if it firms up and sticks.
And I'll say the O'Neil rule, it went 20% in 3 weeks. you got to wait to hold it for 8 weeks.
Mm.
So, you know, I mean, I have to get into LMT. It's one of my favorite stocks.
Which one? LMT.
LMT. I use some of their other products. I enjoy it. So
You fly their aircraft?
Yeah.
Do you buy their missiles?
Oh, I love their aircraft. Actually, no, I actually do. I have worked on their simulator products, actually.
Nice.
Really?
So, yeah, it's for my VR, and my office has Lockheed jets all over the walls.
Wow.
my favorite airplane. They made it. So, SR-71 was Lockheed's airplane. But
wow.
no, this is wait for
Their
a
head
setup.
of finance is Lockheed. They run their own money. I used to meet with them quite a bit. A big O'Neil follower.
Wow.
But anyway.
Wow, that's but yeah, there's let's see. Oh, there's a good question about this person is asking about RSI and MACD versus IBD's RS. How does that relationship play out?
Yeah, it doesn't. There's not overlap, if you will. For those not familiar, this RS rating, relative strength, and it may have changed since I was there, but it is a 1-year rating with a heavier weighting on the most recent 2 or 3 months. So this line is quite simply telling you the performance of this stock relative to the S&P 500. So we have the S&P plotted up here, and that is what this now. The other service with O'Neil, you can modify this so it shows relative to the small cap or whatever index you follow. But this is relative to the S&P, and quite simply is telling you that this stock is, look at that sharp uptick. It's clearly outperforming the broader markets. And then, of course, as this relative strength hits a new high, I mean, there's just a lot of other, it's a pretty simple metric, but the RSI that I use on stock charts is an entirely different calculation. It has that net neutral 50. So you want the RSI trending upward above 50, and it is not what relative strength is here with O'Neil's work.
Are you using your RSI with the base standard values or any different values?
No, I do use the standard value. It works perfect for me. I played with modifying it, but that standard value just really does the trick.
And same for MACD.
You bet. Yeah. And
look at those tight weeks at the bottom of the base here with Lockheed. The most recent.
Oh, right here.
Yep.
Wow. Yeah, that is very, very tight.
They knew.
And then the lightening up on volume as it tightens up.
It's a very tight VCP. Actually, kind of could it be a double bottom? I know the pattern rank is on, but it could be a double bottom in a way because there are 2 legs. It's hard.
Oh.
I'm not sure.
Yeah, going to a daily.
I like the higher lows.
Yeah, going over to a daily chart, this is something that I need to do a study on, but you actually had a gap down in the middle of this base, but if you draw a line sideways from that close, you'll see that it never really breaks below that too much, and you actually have that as support twice before it moves up. So those tight weeks kind of formed right above that high volume close. So that's something I need to do a study on, but I've noticed that over and over. Even on a huge gap down, if it holds near that level is pretty important to watch.
That then becomes support.
Yeah. It's a level of interest. It's not necessarily support until it actually works, but it's a level of interest for sure.
And that's on earnings usually. So we can very quickly just take a look at Facebook. This is after earnings.
Yes. See these leaked below it, so it's kind of invalidated. But
you bet.
yeah, there's a lot of examples. I can't think of any off the top of my head, but I mean, recently earnings have sold off afterwards, but Lockheed is an exception for sure.
So it's interesting that it was able to recover from that, and
exactly.
it took time.
It's also not that far from the 10-day moving average. It's close. It's close to it. It's not like away from it. That was, and you can see it's starting to climb above it. It's starting to,
But this is where waiting for that break above
50
right really pays off.
Yeah.
Because you've hit resistance, pull back, hit resistance, and then once we break through,
right there.
Yeah, freer to advance. Good stuff.
Richard, any more questions coming out?
Sam, we didn't cover how to track sector rotation in Excel, but I'd highly suggest you rewatch the beginning of the meeting. It's completely live. I think you can actually just scroll back here and watch the beginning. Let's see. There's another one. We talked about favorite moving averages already, so I'm not really seeing any new questions. Anish, did you have anything else you want to talk about?
No, I'm having a lot of fun today. So
yeah, oh good.
Good. This is I'm having fun. I love stocks, so this is a really good meetup. Thank you, Mary. This is
I'm so excited.
This is a really good meetup. We cover some advanced topics. I already know it, because we were talking about it, but there were some advanced topics we'll cover today. And just in the conversation wise, I was like, this is a really very good meetup. And it's timely because this sector rotation right now, there is going to be rotation. It's setting up for the next rally. This is such a perfectly timed meetup event.
Yeah, it's all going to depend on, of course, how the economy unfolds and if we can tame the inflation as far as whether we get back into the game again. But the nice part is, while growth is lagging, there are enough other areas that are really on the move and for good reason. So that's the good news.
Yeah. So, any more questions, Richard? Anything you want to say?
No, I think I'm good on my side. I think we've had over 1,000 total people today at various times, so this has been
neat.
This has been awesome. Yeah, we've got over 100 watching live right now, and I'm sure a lot of people will watch this later as well.
Yeah, this is a really good presentation. Thank you, Mary.
Oh my gosh, thank you for having me. It's my favorite. Well, the stock market is my favorite thing. Within it, sector rotation, my favorite topic. And yeah, it's been great. I just really enjoy sharing my years of experience.
I appreciate it. For me, because when I started with O'Neil, it was the sector rotation for me also. I was like, oh, this is so cool. You get to see these moves happen. And that's why this topic is so much fun for me, because you really do get leaders coming out of, when the rotation's happening, you really do see leaders popping out.
Absolutely. Yeah. The first.
And those trades are amazing.
Right.
I love.
Yeah. That when you see that sector reversing and you get in a timely manner and you have the capacity to identify that top candidate, you're really on your way. I do a trading room. In fact, I'm going to start a free live trading room the week after next. But I did a training room last week, and a gentleman said, oh, what about, I wish I could recall the name of the stock. But it was an agricultural, it was a fertilizer name.
CF?
No. Oh, gosh, I love CF. But he pointed out a name that just was not participating. It was just flatlining. And I said, well, gosh, the group's on the move. These are the names you want to look at. And this was back here. It was all about how to play the pullback, how to buy on the pullback. And you know, in these
So
movers.
how would you play this pullback now on a day out? Let's say you're looking at this stock, the previous one, or CF also on a 5-day moving average. How are you using the day chart or the intraday chart to load? Because on a day
That's a
chart,
great question.
there will be a lag. The bar is going to get close to it, but the moving average is not really going to touch it. Sometimes it touches it.
Well,
How
I'll
would
say
you do that?
CF, I bought it here. It got up like 27%, and I sold it. It went down a little further, and then I bought it back. I don't do that often, but I realized that the momentum was still in it. Let's take a look at CF, because I talk about intraday charts this year very frequently as a guide. So here's CF. Let's take a look at an intraday. The first, just go over to here on the intraday for CF. Now this is a 15-minute. Usually I'll do a 1 hour. It's going to smooth it out. And so here we are. This was that pullback. So on the intraday, I use a 5 and a 13 moving average, but as long as this RSI stays up in positive territory, I'm going to stay with the stock. This is that momentum on the intraday shifting. It can just be either it consolidates or it pulls back. So again, only more recently I'm keying in. This is where I sold it. The RSI turned negative. It broke below the moving averages and the MACD. But then as a re-entry point, it breaks back above these moving averages. Your RSI turns positive again, and then you have that signal crossover. So that, but yes, for where we are now in this current market environment, the intraday is going to be really quite helpful. So we can look at really any number of names, but OXY, this is another way with conviction. Even though we had these big moves in OXY, it was up 45% 2 weeks ago, the top S&P performer. But when you're using the intraday, you're going to stay with it. It's above the MAVs. Yeah, it's overbought, but your RSI, even now, still positive. You can stay with it. So this, yeah.
Oh, that's very interesting how you use your MACD and RSI with it.
Yeah, so the momentum, the MACD is trending downward, but quite simply, it's a period of consolidation.
Yeah.
Did you have a name that you want to look at?
No. I was just wondering how you did O'Neil use a MACD and RSI, or he just
No. He was not even stochastics. It was not even something that was of interest to him. Okay. And he would reluctantly, big clients would call in and say, well, can you add this? He very rarely acquiesced. But no, my looking at those metrics are really new. So it's only been about for 5 years now that I work with more self-directed investors, and I only have a couple of hedge funds now that I work with, and it's mostly devoted to self-directed. And so then I am so pleased. I'm a part of Stock Charts. They have a select team of contributors. And it's since then that I really tuned into a different way of looking at the markets. And so really it's just an add-on. It's just adding, it's like another dimension. It's another dimension. So here we are, on Stock Charts TV. You can take a look.
Yeah, I was going to talk about this.
Oh my gosh. Yeah. So
I
have a weekly show, and then there's so many of you and those watching and else that are fans of O'Neil's work that I have a very big following over here. I was trying to find, they had anyway. So
your interview with Arusha was very good too on his podcast.
Oh my gosh, yes. What a great, yeah.
That was a good interview. I mean, that was a good conversation with Arusha.
Yes. Yeah, always fun because you have that synergy as it relates to style, but also a deep understanding of O'Neil, how he works. Because when I was speaking with them about energy, they was if you're newer to the markets and newer to O'Neil's work, back a year, in the fall of 2020, you'd say, well, wait, they don't have earnings, and you would have that typical, I need to see this and that. But from my work over many years with O'Neil, he in the 90s, he was all over the drillers. Yes, growth, technology, consumer discretionary, when they get going, those are your big winners. But uh, it's all about taking advantage of these moves into other areas that might not have always huge growth numbers, but they're on the move.
Very cool.
Yeah.
Wow, this was a phenomenal presentation.
Oh my gosh,
did you enjoy?
great.
Did you enjoy it, Richard?
Yeah, absolutely. This is great.
This
Good,
was
good.
good stuff.
Very good.
I want to thank you, Mary, for
Yes.
attending and taking time off your day, especially on a Friday, for this really good presentation. This is so much. I had so much fun in this.
Oh, I'm so glad. Well,
And
I'll be glad to come back when we.
yeah. We'll do some more meetup
Yeah.
events. How about that?
That sounds great. Super.
I've really enjoyed this material because it's ties in with the group style, because my this group is extremely cancer focused, and your presentation was really on spot, on on point with the material. We should do that, and then
very good.
this is a really insightful. Timing is perfect.
Okay.
I'll announce the next meetup in a few months for all the people who are watching the video. Just stay tuned on my Twitter. I will be a little bit not as active on Twitter for the next few months. My other projects are there. I'll be there, but it's not as active. But I will announce the next meetup in a few months. I think I will be presenting. I'll make some materials on that. But if you have any questions for me or Mary, Richard, please, you can use our Twitter. Richard, you want to post that link again for Mary's on the chat?
Yep,
if you can.
I posted the course, and I'll go ahead and post the discount link as well. Let me get that up.
Oh, and I did send you a link for the newsletter. If people want to trial that, they can. Great way to stay on top of the markets.
Oh yeah, you want to talk about your service a little bit? There's a question about that.
Sure. Yeah. So it's called the MEM Edge Report, and it comes out Sunday evening. Is the lengthier report that talks all about the markets, where are we, what to be on the lookout for, and then it goes through the sectors that are currently in play. Here's what's taking place. Certainly within oil, there are other dynamics outside of the supply squeeze that are pushing the price of oil and stocks. So I go into that, talk about each stock, where buy point is, whether it's in a strong buy zone. If it's not, buy on the pullback to this area for each sector, and then stock, and then wrap it up with the summary. Here's what's going to take place next week. Be on the lookout. Next week, of course, the Fed is going to be on Wednesday announcing their rate hike. It seems baked in at 1/4 point, but there is going to be volatility around that number, and things of that nature. And then a Wednesday midweek report highlighting shifts, adding stocks as needed. But during this period now, I've been doing a lot of alert reports on Tuesday and Thursday just to keep people tuned in. Even Monday, I did one last Monday. Anyway, it's just filled with great information, but more importantly, those stock picks and getting you in front of those stocks poised to outperform.
Very cool.
Yeah. So yeah, keep an eye. I mean, on that Twitter, I do have a free trading room coming up as well. It's to promote a mastermind course that I'll be doing in April, and it's going to be a mentorship. So forgot about that. With simpler trading.
Okay. Very cool. Thank you. Any questions? I've already tweeted her Twitter handles on the tweet. If you guys see my Twitter, Richard's also retweeted. So any questions? Reach out.
You bet. Sounds good.
Thank you very much.
Of course. Have a great weekend. Hope to see you soon. Okay.
Yep. Thank you everybody for watching, and remember, leave a like on this webinar, this live stream, if you enjoyed it, and of course subscribe to the Traderlion channel. And we'll see you guys in future videos and live streams. Take care. Bye.
Thanks, Richard.